Hey, it's Soleil, and this is episode 175 of the Orange Pill Investor. And today I want to talk about quitting the channel with MicroStrategy above my strikes. I can no longer continue making videos, and I got to go into early retirement and never show my face again. Uh, just kidding. This is basically par for the course. I think the strikes that I selected, can't remember if they were like at the 80% chance of being out of the money. So this should be an expected event that happens 1 out of every 5 times. And if I just zoom out a little bit, since May, you know, May, June, July, so 3 months, these covered calls have all been working out. So this has all just been, been profit. So this really kind of wasn't unexpected, especially with the 10-to-1 split. There could be a nice run up with that. And but yeah, so my 15-10 strikes are reached big time. And so this is the limited upside that your mama warned you about. And so I was able to profit from 1350 to up to 1500. And then this extra $100 I will not profit from. And when the stock is down, I like to say the down plan is the same as the up plan. And when the stock is up, I say the up plan is the same as the down plan. It's basically still just reducing cost basis, which eventually just chips away at your purchase price. And if you can keep that up long enough, the stock is basically free, and doesn't matter what the price does. And just for example, so Tesla, I mean, I rode Tesla up all the way up to, what was it, 400 a share? This is split adjusted. Yeah. I rode Tesla all the way up here, and then I rode it all the way back down here. And so this is not really unusual, but about half the people watching this might be new here because my account doubled because I got tagged in a post for how to on how to do these covered calls. And so if folks are trying this out in their very first covered call, they're getting wrecked like this. This may be an eye-opening experience, and maybe it'll be for the best. You touch the oven once and you get burned, and maybe you just swear off covered calls forever. Which could end up being the best play over the next 18 months. The buy and holders may be the ones that make the most money. But again, selling covered calls is not necessarily meant to capture maximum upside. It's either meant to collect a yield or to mitigate downside risk. And if one was going to be a bit of a sniper about this, you're more than welcome as the price is kind of trending sideways here, especially after you get this bottom and then you see some sideways trending. You could just sit on your hands and not sell covered calls. I could have done that, but I generally just never bother because this is just, you know, the price of the stock goes up, it goes down, and it's funny. I've got a couple of good, funny comments recently. So Cole on X said that he hopes folks that watch this, my videos for the first time, didn't run off and sell covered calls. And then a YouTube commenter actually said, like, how do you don't really seem to panic, like, when 80% of my account is MicroStrategy, and it goes from, when MicroStrategy went from 2K almost in half, and 80% of my portfolio is in MicroStrategy. I mean, my numbers are just taking just wild wild fluctuations. And but again, down plan is the same as the up plan, and it's the same mentality that the buy and hold people have. You just grin, you just grin and bear it. You gut it out when things are going down, and then you enjoy the spikes. You don't necessarily capture all of the upside, but you are mitigating your downside risk all the way down. And really, the one other reason why these swings don't really bother me is I've been doing this since quite a while before I even knew MicroStrategy was even a company. And I just started with basic math. And the way that I figured it is if I can collect 1% selling a covered call, then that means I can buy one more share that week. And after 100 weeks, I'll have 200 total shares. And then I can sell 2 covered calls and buy 2 shares. And it only takes me 50 weeks. Now I got 300. Then eventually I have 400. And so it doesn't really matter if you're investing in MicroStrategy, Tesla, some of the cheap, $10 mining stocks. The value and having a 5K account that I'm trying to have a little challenge and see if I can just trade with cheap stocks. Doesn't matter if you have a 5K account, 25K, 100K. The value of your account is just X. It's just a variable. And so when MicroStrategy crashed from, I had a bunch of shares when it was 2,000 a share, and then, when it was down here at 1,000, my account value just, just within a month was completely, kind of gutted, really. Lost a ton of value. But it doesn't really matter to a certain extent as long as you have a long-term investing frame of mind, because if the value of your account is X and percents are just based off of whatever that account value is, no matter what the price of the stock is, it doesn't matter if it goes up, it doesn't matter if it goes down. If you collect a 1% premium, you're still going to be able to buy a share in that stock. So if the price of your stock is $100 a share, collect 1%, you can still get a share. If your stock costs $10 a share and you get 1%, you could still get one share. And eventually, if you do this long enough and you're getting your 1% a week gains, at some point you'll end up with 10,000 shares. And now, instead of it taking, 50 weeks, 100 weeks, 2 weeks to get to another 100 shares, at this point, once you've got 10,000 shares and you're getting 1% returns, you're able to buy an extra 100 shares every single week, which means you don't have to wait at all to sell an additional covered call. And so I call this reaching critical mass. And so as far as I can see, selling covered calls, reducing my cost basis, collecting a premium, and then reinvesting all the profits just is all leading to reaching critical mass. And then your returns aren't just 1% a week and 52% a year. Then it becomes a compound interest calculation. So at that point, it's 1.01 raised to the 52nd exponent, because you're going to be adding an extra 100 shares every week and getting an extra 1% on top of your 1%. And so at that point, your gains are 67% a year. So even if I just assume that MicroStrategy doesn't exist, if I can find something and get 1% a week, I'm getting 67% a year, which is just dwarfs, index fund investors and dividend investors. You got to pay taxes on all of it, of course, but I'd rather pay taxes on 67% than not pay taxes on whatever the hell they're making these days. So yeah, I mean, I'm not gonna lie and say, oh, I wish I had some kind of crystal ball and I knew, or excuse me, MicroStrategy was gonna go up specifically this week, and I didn't sell any covered calls, or I waited until the pump and then I sold, some 1,800 straight covered calls. That would be best case scenario. But hopefully you watched all the warnings and you watched the mitigation strategies if you did try to test this out, because I have two of these leaps that are not just capturing upside, but they're capturing leveraged upside. So I've got 85 delta worth of long here. So yes, I am, when I'm selling a covered call, I'm not even short. It's like limited short. I'm short past like 15% call away value. Above 1510, I'm short. So selling covered calls is still a bullish strategy. It's just not, to the moon bullish. And the reason why, like, okay, well, if you can buy these leveraged leaps, why wouldn't you just put 100% of your money in them? And the reason is because if the value of these leaps can go up 50% when MicroStrategy has only gone up 20%, then these leaps can also drop 50% if MicroStrategy goes down 20%. And MicroStrategy is going up and down 20% a lot. So this 23 grand that I paid for this leaps could have easily turned into 10 this week if MicroStrategy was 1100, not 1350. So I definitely don't want to, my personal preference is to keep around 10% of my total portfolio in leaps. And with this pump, and even before, I had been DCAing into these, and so I'm a little bit heavy on leaps right now. Um, but it's not so much that I find it too concerning. If it got if it got up to like maybe over 20%, that would probably start to annoy me a little bit, and I would have to pair some of these off. But let's see, I sold these covered calls for 1,300 a piece, and they've basically 10x'd in value for the guy who bought them from me, and so he's happy. But both of these leaps have each also appreciated 10 grand. So worst case scenario, I either just paid a roll. So here's my options. I'm not freaking out about this. It's Monday. I've got until at least Thursday to watch and see what happens. MicroStrategy could be 1475 by Friday. It could be 1700, 1800, 2000. And really, it may be a bit of a surprise, but I hope it does go to 2000. I hope it goes to 3000. That really doesn't matter because I have this upside protection. And so if the price goes to 2 grand and I have to sell these in order to, to buy back these contracts, that's completely fine. And this is, I can make a look at the silver lining in any cloud. So if I buy these back and I pay 10 grand on each of them, that actually counts as a loss because I sold it for this and I bought it for this. So really, that's going to mitigate some of my profits for the year as well. But I couldn't be happier. I mean, my account I took a vacation, had a fun weekend in Charlotte, North Carolina. Went to see Nikki Glazer comedy show. I had seen her before, so I knew she'd be funny. I wasn't like rolling on the floor laughing or anything, but it was entertaining. Entertaining. It was worth a look. It's kind of crazy because I was on vacation and I just wasn't staring at my phone. I actually didn't know about the assassination attempt until the comedians started telling jokes, and I'm like, what the fuck are they talking about? Like somebody's shooting at Trump. Like, doesn't make any sense. So after the show, I'm like, oh, I guess somebody tried to take a shot at him. And after the show, I turned my phone back on, and I'm like, sure enough, okay. Um, so yeah, I was completely clueless. I wasn't, I almost kind of, it's almost a matter of pride for me to not know what the hell's going on in the news. Um, I figure the less misinformation I'm absorbing, the better. But yeah, so here's my options. I can, if I don't, if I don't want to lose these shares and I don't want to even lose the leaps, I could just pay to roll these. If I've got some buying power, I can do that. Um, if I was like, you know what, maybe I've been holding MicroStrategy since whenever, and let's see, my trade price, my cost basis is 1378. So, you know, even if I was forced to sell my shares at 1510, that would be for profit. But anytime you're ready to exit any stock, it could be MicroStrategy, could be anything, you can just sell a covered call at what you think is a fair exit price, and then you're just going to collect premiums until you arrive at that price, and then you sell them off for the price you want, and then you're a happy camper. It's a hell of a lot better than setting a limit order, which may never hit, and then you just watching your stock languish. All right, so I could let these get called away. I absolutely will not, because I do want to be long MicroStrategy at least through 2025. Um, but I can sell these leaps to pay for it. I can also try to roll when this time is right. I will not be rolling these right now. Um, I just don't feel any anxiety early on in an option contract to do that. Now, if this guy decided to just exercise on me, if he wanted to forego the extrinsic value in this option, he could just exercise on me now. Um, I'd get paid the 1500, and I'd probably just turn around and just buy the shares back. Um, that would be slightly annoying because it would reset my timer on the long-term capital gains taxes, but that wouldn't be the end of the world either. Um, I could let 100 shares get called away, and then I could just start selling puts. That would be fine. I can, I can sell any of these leaps to pay for the roll, or um, let's assuming today was expiration, or Thursday or Friday. If I wanted to roll this out to 45 days, and some people will do this, but what's it going to cost me? About 10. If I rolled these today, it would cost me 12 grand. I can get 12 grand all the way out to, like the 1900 strikes. And that's fine too. Some people will roll, it's called rolling up and out. And so you'll roll out the expiration date, to like 45 days. So I probably wouldn't go past 60 days. And that starts to advantage the buyer more. And I don't like to give the buyers any advantages that they don't need. And that would even give me a little bit more upside, and um, I wouldn't even have to pay to roll this. If I rolled out to this, um, you know, to closer to at the money, could even collect some profit here. So this is really not a big deal. Um, oh yeah, the decision on whether to roll right now is really just elementary as well. So the way that you see when these are out of the money, the value is just extrinsic. So when I sold these and was out of the money, all of this 65 or 85, 65 is all extrinsic value. All of this value has to decay over that 1 week. But the calculation changes a little bit when the covered call is in the money because now it has some intrinsic value as well. The intrinsic value is measured between 1610, that's convenient numbers, 1611 and 1510. So we're going to say $100 worth of intrinsic value times 100. So that's 10 grand. And the value is about 12. So there's about $2,000 worth of extrinsic value in here that I can still collect if I just sit on this. So some people will freak the hell out and they're like, oh, I got to hurry up and roll this because I don't want to be upside down. Then they immediately just roll out to 45 days, get the 1900 strike. And then, and then MicroStrategy goes to 2000 and they're just in the same scenario. And they're just kind of, they're just rolling and rolling and rolling, trying to avoid getting their shares called away. But I don't need to do anything with this until at least Thursday. Occasionally, folks will exercise like the day before, but this $2,000 worth of extrinsic value, the buyer would lose that if he exercises now because he can only exercise at the 1510 and then he'd make $100 a share. But if he were to sell this option to someone else, he can sell it for the full 12,000. So in general, exercising, unless it's very close to expiration, is generally a loser. Now, if this was way in the money, like if MicroStrategy was like 10 grand or something, then there's almost no extrinsic value left here, and you could probably just exercise, and you wouldn't be losing much. All right, so I think that's everything that I wanted to cover today. I think it helps too, being a longtime hodler of Bitcoin, where we buy it at 5,000, then it goes down to 2,000, and then it's up to 17,000, and we're still buying the top at 17,000. Oh shit, it goes back down to 5,000, and then it's 67,000, and then it's 15,000, and now it's 72 again, and now it's 50 something again, and so we just kind of become numb to it, and MicroStrategy is no different. I enjoy the covered call strategy, and it's been working out for me. It may not work out as well as just the buy and hold folks. They may be looking back and say, "Oh, see, I should, I told you so, and that's fine. I like to maximize my chances of success. Even Bitcoin, I'm a laser-eyed Bitcoin maxi, and I think it's going to millions, tens of millions over the next decades or whatever. But I mean, there's some really, really weird black swan events that could derail it, or I don't know if it has too many realistic existential threats at this point. And so, as long as Bitcoin stays decentralized and secure, which is basically me just quoting Jeff Booth, I'm not really worried about Bitcoin. And so, as an extension, in general, because I'm not worried about Bitcoin, I'm not worried about MicroStrategy. It's a derivative of Bitcoin. However, it's got a few more existential threats that Bitcoin doesn't have. So if regulators pressure them to do certain things, they will absolutely comply. I think they custody with Coinbase. And so if the regulators decide they want to fuck with Coinbase, they will bend over and take it. And so there's a few extra threats that MicroStrategy has that Bitcoin does not. You can't carry your MicroStrategy in a brain wallet and flee the country. So I'm not as beholden to MicroStrategy as I am Bitcoin, but because I'm so bullish on Bitcoin, I basically have that transfer that same bullishness to MicroStrategy as far as number go up. And so because I did the math where I can collect a yield. I'm selling short and then going longer, selling short and going even longer, selling short and going even longer. And eventually, I just want to have more and more and more and more shares um, than the person who just bought 100 shares and then, 100 times the value is what it is. I want to have 150 shares. I want to have 167 shares, and then I want to have 239 shares. While the buy and hold person still just has 100 shares times whatever the value is. So once I decided that selling covered calls was my strategy, then I have to decide on what assets I'm going to invest in. And it's kind of like Michael Saylor's, like, diversification isn't selling the winners to buy losers. So I'm not investing in a basket of index funds and all this other, happy horse shit. I'm basically just own two assets: Bitcoin, which I include Bitcoin derivatives in that bucket, and then Tesla. So that's the extent of my diversification. The mining stocks are derivatives of Bitcoin as well. Um, and selling covered calls is a bullish strategy. So you always want the number to go up. The perfect scenario would be if it goes right up to your strike price or whatever. But I want the price to go up as much as the guy who has unlimited upside. My shares will still be worth that amount as long as I've protected them with some insurance and I don't get them called away. And so if MicroStrategy is going to 2,000 by Friday, that means the next time I sell a covered call, I won't be collecting 1,300. I'll be collecting 2,000 a week on each increment of 100 shares. So I'll be more than happy when MicroStrategy's at 2,000, 2,500, 3,000. I will absolutely miss out on some of that upside, but not terribly worried about that. And I'll be slap happy when MicroStrategy is 10,000 a share, and and having 100 shares of that, it's worth, $1 million, and I'm collecting 10,000 a week, selling a covered call against it. I will not be hating life at all. And if MicroStrategy is 10 grand a share and I'm collecting 10 grand a week, and then the price goes to $1.25 million, or 12, 12,500 a share, and I miss out on some of that upside, big whoop. Of course, by end of 2025, I will be exiting all of these long call positions. I will not be trading on margin. For now, I feel like we're kind of at the beginning of the bull cycle. Could be wrong. Bitcoin could decide not to follow the 4-year cycle anytime it damn well pleases. It can just do whatever it wants. But that's my basic assumption for right now. And that's about it. Up plan is the same as a down plan. And I actually can't wait until this does do a 10-for-1 split. The liquidity should get better, but it's going to be a hell of a lot easier to just decide to sell, like once I have 2,000 shares of MicroStrategy instead of 200, I can sell covered calls on half of them, or, 3/4 of them, and just leave 500 uncovered. There's just so many more ways to do it. But right now, when MicroStrategy's 1,500 a share, it's kind of like, it's harder to take little fractions and break it up into little pieces. If I got 2,000 shares, I could sell, um, 10 covered calls getting 1%, another 5 covered calls getting 0.5%, another covered calls, being more aggressive with it. Can play all kinds of cool little games uh, and tricks with it when this is going to be much cheaper. But right now it's like a big heavy ass object that it's hard to get your arms around and carry up the stairs. So that'll be fun. Looking forward to that. These leaps will become way more affordable. They'll be less scary than, when I bought each of these for 23 grand. Once these are 10 to 1, these will only cost about 2 grand. So anybody who wants to buy themselves insurance will be able to do that at much cheaper prices. And so I'm psyched about that. And I think that's it. So, of course, I'll be watching the price all week long with eager anticipation. But yeah, I mean, I hope it rips to 2K, 2,500, just like everybody else does. And if it does, I will, peel off a leap or two and, and pay for it. So, all right. There's always options with options. And hope that helps relieves anyone's anxiety if they're deciding to dabble in this as well. All right, be good, y'all.